But here's the number one chart of all of this that I wanted to show you. This is such a cool chart. This, when I found out, this is the highlight chart of this entire video. I believe that most investors have it completely wrong the way that they're looking at oil, and that's leading them into some risks that they should not be involved with, also missing out on some opportunities. I'm going to show you what really moves oil prices, and it's not what you've been told. It's not supply and demand. We'll get into a whole bunch of stats, and I'm going to show you a different outlook on the way that you can appreciate oil and position yourself to profit as it rises and falls, both of which are going to be happening in the coming weeks.
Please subscribe to get our next actionable video.
Everyone's going to be telling you that supply and demand is what dictates oil prices or moves them. That's categorically not the case. There's a room of traders in London, there's a room of traders in Manhattan, and they're dictating what the prices of oil are going to be because they're speculating on it. They're trading oil for where they expect prices to be. So when a war breaks out, that war doesn't increase oil prices. It causes the people who are deciding the price of oil to pay more for oil in the future. And that's why oil prices then rise. So you've got speculators, hedgers, and then thirdly, you've got supply and demand, which also affects oil prices, but it's not the be-all and end-all that everybody seems to believe it is. There are two main price drivers for oil right now, both of which are polar opposites. And this goes into the video I made a few months ago, the oil spike and fade. Oil is the most common liquid on the planet after water, but right now the economies of the world are slowing down, and so there's every day a pull lower on oil. We need less and less oil than the price would imply right now. There's a huge risk premium because of the wars breaking out, so the prices of oil are a lot higher, and also because of the risks of what could happen and the uncertainty. So yeah, you're going to pay more for oil. But in terms of just the demands on oil based on how much the world's using, that is diminishing rather quickly. So you've got a sliding price of oil every day, being pulled lower every day. But then you're prone to these spikes where a big macroeconomic event breaks out or some kind of conflict expands. Then you've got these spikes. There's going to be a lot of short-term spikes, significant spikes in oil prices, while it's continually pulled lower over time. This is from Worldometers. The current supply of all known barrels of oil in the world, even underground, is 1.65 trillion in terms of known reserves. Meanwhile, the current demand is 97 million barrels per day. And you guys know I always talk to you about the Reserve Life Index, RLI. How many years at the current extraction rates will this resource remain? So if you talk 1.65 trillion known barrels in reserves globally, then you're looking at 97 million barrels being used up every day. That would give you about 47 years. However, the information from Worldometers that I have here is from 2016. That's 8 years ago. And while year to year things don't change that dramatically, so it's okay to use something like oil from 8 years ago, but take 47 years of remaining reserve life and take off 8 years from that, we're looking at 39 years. And when do oil wars really seriously break out? It's not when there's 1 year left. It's not when there's 10 years left. 20 years are getting warmer. There will be major military escalations more and more as oil becomes more and more scarce. And interestingly, they say now we use about 97 million barrels of oil per day. When I first made the Peter Leeds World Oil Depletion Clock, worldwide we were using about 85 million barrels per day. Now that number is up to 97 million, probably even above that now. But I'll put a link below if you want to see the Peter Leeds Oil Depletion Clock, basically counting down the time that's left before the world goes to O day, or the day where there's no more oil available. Call it 0 day if you want. There'll be no oil. There's going to be wars breaking out because of it. There's going to be risk premiums. There's going to be major distribution issues. There's going to be major hoarding issues. And to back up my comments about the things that really drive oil prices, this is from Investopedia talking about investor sentiment. The other key factor in determining oil prices is sentiment. The mere belief that oil demand will increase dramatically at some point in the future can result in a drastic increase in oil prices in the present as speculators and hedgers alike snap up oil's futures contracts. Of course, the opposite is also true. The mere belief that oil demand will decrease at some point in the future can result in a dramatic decrease in prices in the present as oil futures contracts are sold, which means that prices can hinge on little more than market psychology. That's my point. And I'm going to be working on Stockology as my next book, but not for a few years. So just keep that in the very back of your head. But what I'm trying to say is that oil prices are not dictated by supply and demand. Oil prices are not dictated by supply and demand. They're dictated by decisions of the people who are speculators in the space, and then everybody follows that. So if the speculators suddenly panic that oil prices are going to be going to the moon and they all buy up oil prices, that's why oil prices rise. But I want to talk about the U.S. Strategic Petroleum Reserves, the SPRs. The purpose of these, which apparently has been lost, is for the times of utmost need, times of war, times when we need oil to defend the population, but we don't have any oil. But instead, it's been used recently for political gains where Biden wanted to get some more votes, so he released a bunch of oil to make oil prices less expensive for people. Insanity. You get some votes, but then you've got way less oil in the Strategic Petroleum Reserves. So let's look at a chart of this. 1 year, looks like the SPRs are being rebuilt or reinflated pretty aggressively. But not if you pull out and look at a 10-year chart. We used to have a lot more. We were in a lot more secure situation.
You help yourself and people just like us when you click the like button.
Now, this is from Best Diplomats. The top 10 countries with the largest oil reserves in the world. Starting with Venezuela. Canada comes in 4th. United States comes in 10th. But let's talk about the real powers behind the scenes that are controlling oil prices, and that's OPEC. Here's a list of all the countries in OPEC, from Algeria, Congo, Equatorial Guinea, to places like United Arab Emirates and Saudi Arabia and Venezuela. But then you've got OPEC Plus, which is just basically Russia, Mexico, Kazakhstan and Oman, and then a bunch of others that each have production of less than 1 million barrels a day. All of OPEC Plus put together results in 16.5 million barrels of oil per day. But of that 16.5 million, 10.3 million are just attributable to Russia. And if you take out the OPEC Plus, you look at just OPEC, they're producing about 28.7 million barrels per day. OPEC Plus, 16.5 million barrels per day. And you can see from this chart the different magnitudes of each country which is producing oil from OPEC and OPEC Plus. And here's a chart I found from Rebel Capitalist. Big oil is a circle which is engulfing all the other raw metals markets. Each of these circles represents how large each of the metals markets is, and then oil engulfs all of that together in terms of comparative size. But here's the number one chart of all of this that I wanted to show you. This is such a cool chart. This, when I found, I go, this is the highlight chart of this entire video. It's from Deep Knowledge Investing, and it's about the petrodollar. Transformation from exporter of goods to importer of goods. Prior to the petrodollar system, we were a net exporter of goods. Now we are a net importer of goods. We export dollars and we import cars and phones. You know, I always tell you that America used to be the manufacturing hub of the entire world. And now China is taking over that mantle while we're just putting our money out to buy all the stuff that they're making. And this chart says it all, how we went from a production surplus to a production deficit. And now we've got an ongoing negative balance of trade. We're just pushing away our GDP to other countries and just taking the stuff that they're making. And we're importing everything mainly because we have the petrodollar status, which is holding our currency in higher regard around the world than it otherwise should be. But I'll tell you exactly what I'm going to do with this big oil rethink, where you need to understand the two things, the main drivers of oil are pulling in different directions. Macroeconomic events like war, declining global economy. They're pulling in different directions. It's going to be incredibly difficult to play oil prices with any certainty. So I'll tell you what I'm going to do personally. I'm not giving you personalized trading advice.
The Peter Leeds newsletter is one of the most popular financial publications of all time.
What I'm going to do is look to unload some of the oil companies that are doing very well for me right now, but not yet. I'm going to give it a couple of months and sort of look for opportunities to unload some of these just to go to cash more to be ready for this big stock market meltdown, which is going to happen. And it may take down some of the precious metals companies and some of the oil companies as well. And I want to get some of the money off the table out of oil before that happens. Precious metals, I'm just going to let that ride no matter what happens. But you're going to want to be in a heavy cash position to take advantage of all of these tremendous opportunities which are going to be showing up all over the place. And it'll happen where one day it just happens and all of a sudden everything's red on the screen, and then we have a hard time recovering out of that, and it just gets worse and worse, and people say, well, maybe it'll bounce back, and they wait longer, and then they blink and you're looking at down 80% on some of these stocks. You're definitely going to want to keep an eye on this with me. I'll help you as much as I can. That's why you subscribe to this channel. And please become a Peter Leeds Insider, peterleeds.com/insiders, because then you get direct email contact with me. You can ask me anything you want. You get a special newsletter, and you keep us independent, sponsorship free, advertisement free, and we work super hard for you guys.